I recently made a tweet asking the audience on Twitter, by the way, follow me there at Mr. Macho Mog, should I double down on BTI stock, that's British American Tobacco, or BATS on the London Exchange? Is it the best value in nicotine stocks? Well, I received a couple of interesting responses. First, from David Killian. I certainly believe BTI, aka BATS, is the best value in nicotine stocks, also the best value amongst blue chips, period. You rarely hear an endorsement that strong for a traditional old school tobacco stock. I call them nicotine stocks now because I think that more accurately represents where the businesses are and where they're going. And then War0001, pick up a little PM, that's Philip Morris International, based on their monster Zyn as well. And yes, Zyns are huge. And I do think that products like Zyns do show how these companies have managed to stay relevant to newer audiences and find new ways to deliver their core product, which is really nicotine. So, British American Tobacco, the price of the stock has gone slightly downward over the last year. Not a very big movement, just a negative 5%. Although, if you factor in their dividend yield, most likely you've made out slightly ahead, but not by much if you've been invested in this over the last 12 months. I personally hold a small position of around 100 shares in this stock, and I am slightly down. I think I've held it for a bit more than a year at this point, and I have collected a lot of dividends on it, which certainly helps. Counting the dividends, I am probably more or less break even or slightly up on my position, but it leaves the question, is this still a value? Is this something I should consider doubling down on? Is this just something that the market hasn't realized is great yet? So one of the big considerations here is how much capital they return to shareholders. Most of that is done in the form of dividends, and the data feed has their yield at 9.69%. It's basically a 10% yield, okay? Though you do have to be like a little careful with the data feeds because the native currency of this company is in pounds, and they also do business internationally. So there's some currency conversions on like the data regarding the revenue and earnings and everything. But the yield is basically accurate. It's very close to what it actually should be. Now, the thing that's interesting here is the buyback portion. They've done like just the smallest little smidge of buybacks, barely even registers. So why is it that the buyback angle is so interesting? Well, on a market cap of about 52 or 53 billion Great British pounds, they're producing free cash flow annually of over 12 billion Great British pounds. Now be careful if you look up market cap yourself, because if you look up the American ticker BTI, you will get a market cap of 65 or 68 billion dollars, something like that. It can all get a little bit confusing if you look at different sources, and the data feeds don't necessarily make it clear whether you're looking at pounds or dollars for certain figures, and in some cases it'll vary depending on which part of the data feed you're looking at. Even if it's all on the same site, you could see the market cap in US dollars and the free cash flow in pounds. So doing the sort of math on things can be a little bit wonky, so be careful. So with all those caveats out of the way, it does look like the stock analysis chart on the price to free cash flow is actually expressing the correct amount. If you take the free cash flow as Great British pounds, which it explicitly says that the income statement numbers are in fact Great British pounds. And then I checked what the market cap for the BATS London Stock Exchange ticker is, which is also Great British pounds, and it came out with a number that was basically this. So basically, we're between 4 and 4.5 times a price to free cash flow for this company. So basically, if they were to put 100% of their free cash flow into buybacks at this price, it would take roughly 4 years and 4 months for them to buy back 100% of the stock with their free cash flow, which is why people are looking so much at the buyback angle right now. One of the things potentially driving their decision not to accelerate hard on buybacks is the net debt, which they've got about 34.5 billion in net debt, which would be just under 3 years worth of 2023's free cash flow number in order to pay this off if they put 100% of their cash flow towards that. Of course, they can't, because about 60 something percent of it or so goes towards the dividend. And cutting a dividend on a tobacco company, or a nicotine company, as I like to call them, would crush the share price. Shareholders would probably literally riot in the streets. However, if they did that and the share price collapsed, let's say they cut the dividend or suspended it, they'd be able to split their free cash flow between paying down debt and shoring up their balance sheet and doing aggressive buybacks. That combination would actually return an incredible amount of value to shareholders. However, again, people buy this for the dividend, and shareholders literally would be rioting in the streets calling for the heads of the board if they were to do something like that. So while I don't think that's going to happen, I do think that the stock has reached a point where the board can't ignore how cheap their share price is compared to the amount of cash flow they generate, and is likely to put something towards buybacks, which will, of course, to whatever extent they do them, generate a ton of future value for shareholders. And let's also remember that each share bought back, they save 9.5% on not having to pay the dividend on bought back shares. So if that's cheaper than refinancing debt, that's probably the better move anyway. So the analyst that this data feed captures recommends this as a buy, with they're estimating 23% upside over the next 12 months. I actually think the stock is worth a lot more than 23% more than the current price. I think this is probably a $50 or $60 stock trading for about $30 right now. So before we get into this DCF, please do not take DCFs as gospel, especially when there's somebody else's numbers. And I'm admittedly just kind of going quickly back of the napkin on this. So I just applied the standard 10% discount rate. The data feed on stock analysis had the free cash flow for 2023 being about $5. Guru Focus has the last 12 months is $5.73. So I'm assuming they just converted the pounds to dollars for that, which is fine. Tangible book value also expressed in dollars. By the way, this penalizes them for all of their debt and doesn't give any of their goodwill any value, which the goodwill would probably be mostly brand value for different tobacco brands that they've acquired over the years and other such acquisitions. Growth stage, I'm putting 6%, dropping to 4%. That could be really lowballing them. It could be about right. It's one of those things where you have to kind of predict the future. I do think BTI has some avenues for free cash flow growth, so I'm pretty comfortable with mid single digit growth rate there, and this spits out about $52. Now you might say, hey, that growth is a little high, but also it's not right to give them no credit for their goodwill. And you could hypothetically drop the growth number a little bit lower, but also say, hey, these brands that they own have value, and they could probably sell them for something and give them back something on the tangible book value and still come up with kind of a similar number to what I did. So that would just be splitting hairs to get that granular at the moment. But this is just sort of a way you could sort of realistically get to that $50 valuation I talked about. But I think the key here is that even if I'm off by as much as 20%, we still have a maybe $40 stock instead of a $50 stock that's still trading for closer to 30. So this is one of those cases where you have that, plus you're getting a yield on cost near 10% at these prices as like kind of a cherry on top. It's hard to imagine a way in which one loses big on this. It's not to say that couldn't happen, but I think it's much more likely that one does moderately well to spectacular on this business at this price. But again, some people don't want to get involved in this type of business for moral or ethical reasons or what have you. I don't take morals into consideration when I invest. I've done numerous videos on that topic. This, of course, is just my style of investing. I wouldn't say that this is necessarily right for anyone but me, although I do know other people that are very bullish on this space, and I respect their opinions as well on this. So I'm definitely giving it some consideration. But let me know in the comments below if you're thinking about this, what your opinion is. I'm definitely eager to hear all your thoughts. I will certainly take them into consideration for myself. Make sure you subscribe to the channel, by the way, if you want to watch more videos like this and engage in more interesting discussions. Hit the thumbs up for the algorithm. Join Discord. Link is in the description. Also, catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live. Link in the description. Consider becoming a member and helping support the channel. I always appreciate it. And don't forget to follow me on Twitter at Mr. Macho Mog. Link in the description. Have a great day.